What's going on, guys? So let's just talk about what happened with this US CPI print, okay? Because this was definitely the main focus for the week is what direction inflation is going to go, right? So overall, I was already expecting dollar strength, but just look at inflation expectations, the 5 year and the 10 year. We already seeing that the markets is already expecting inflation to continuously increase. And when it comes to Powell's testimony, right? Because Powell is now having a meeting with Congress. And his statement, just like what he said in December, it's an overall hawkish pause when it comes to his monetary policy stance. Meaning is you can see in the top, we don't need to be in a hurry to adjust policy. So what that means is more likely he's not looking to cut rates anytime soon. More There's just a higher probability there's just going to be pauses in each rate decision after that. But he is focusing on the labor data. If he sees that the labor markets is declining aggressively, that's just going to increase the odds of a possibility that they may cut sooner. But the whole time of why they cut rates in the first place was because inflation was actually decelerating. He was very proud to see that. It kind of gave the feds the concept that they defeated inflation, right? So this is where those rate cuts came in place. But now, with everything going on with Trump's physical policy, right, tariffs coming into play, geopolitical tensions, everything is now signaling that there's a higher possibility of higher inflation. We're still seeing prices of goods increasing, right? You're looking at food, everything is increasing. We're not seeing prices decelerate. So this is one of the reasons why looking for this CPI print is important, because now we could just see that the numbers came out and it came out hotter than expected, right? We could see right here the numbers of CPI across the board. Core monthly, we have a zero point 0.4, which is at line at the high expectations. And we can see that core year to year came out at 3.3%. Another one at the high expectations, but headline is at a zero point 0.5. That was a surprise. And then also year to year at those highs again. So these numbers is coming in hot, right? Is it temporary? Are we going to see inflation next month print come down lower? I don't think the markets is expecting that, right? Because this is why we have headlines like this coming out, that we can see that traders now is expecting a rate cut to happen later on the year. Because before this print, last year markets was expecting at least 2 to 3 rate cuts this year. Now with strong labor, strong economy, higher inflation, the odds of the rate cuts happening this year is now getting pushed back to probably one, maybe none, right? So with that coming in mind, this is one of the main reasons why from the print we had a stronger dollar. This is what we took advantage of, right? Because this is with this higher print, we got a hawkish reaction, which is it supports stronger dollar. So this is why we started seeing the strength in the dollar come in play, which was good for those dollar buys if anybody was able to take advantage of that. And if you look at US equities, what did equities do? We see that equity markets started pushing lower. As you can see, that NASDAQ and US 30 took a very, very big drop, right? This is the definition of a hawkish reaction. You could just see that we consolidated before the data, right? And then you could just see that price just broke below structure. And this is what we took advantage of over the live call. The moves is very quick, but understanding the direction is what's very key. Okay. And this is what's going on, because now that we understand that we have higher CPI, now we just have to look for opportunities just to take advantage of stronger dollar moving forward. So now what's next, right? Because we just have CPI. So what's next? What we're gonna continue to have, just for you guys, that's watching this, got this for you, because what we're gonna focus on after the CPI print is we have Powell speaking later on today. He already has an overall hawkish, like I said, like a hawkish pause when it comes to policy, but Congress could try to pressure him into giving up more information. Like, hey, like when are you planning to do a rate cut, or you're not planning to do a rate cut, right? Because those comments could either make the dollar go stronger, or we could see the dollar get weaker based upon what Jerome Powell says for this meeting, right? And then also just pay attention to not just Jerome Powell, we also have Trump's headlines is really impacting the markets when he talks about tariffs. So if we see that escalation in tariffs do happen, that could also cause a risk off market, which is a direction that we already have with downside in equities, upside in safe haven in a dollar and a yen, right? So if we see that escalations in tariffs continue, that could further push equities lower. If we see escalations of tariffs continue, we could see more dollar strength. We could also see safe havens get stronger, right? If we see Powell at 10 confirms that he is more looking, he's still looking to not cut rates this year, that could continue the directions as we see today when it comes to stronger dollar, right? And weaker equities. That's more likely the moves that we could see continue today if we see Powell just confirm everything. Okay, guys. So it's a quick update. Hopefully this is helpful. If you guys want more information, let me know. If you have any questions, go in the comment section so I can help you guys out. And have a good one, guys. Trade safely.